Hi, ladies and gentlemen. This is Eric Mashinsky. Welcome to our newer members. If you don't know why you're here or who we are, it's because of me. I'm the owner and main editor. You hear from time to time from my main analyst, Will Coons, who puts together our week. He does a great job at the weekly, news consolidation. He posts a blog from time to time with research on particular names. But this is Phenom Crypto is my site, and I want to talk to you a little bit today. I want to keep it fairly brief, but it's important that we check in. A lot of you that aren't familiar with me, um, I've been in capital markets as a professional investor since I was 20 years old. I got my Series 7 license in the US and was a registered investment advisor for 16 years. Most of that time in the second half of my career was as an alternative investment advisor, which means that I just dealt with high net worth individuals, accredited investors, family offices, small institutions, qualified purchasers, which just means that you're worth over 5 million bucks in the United States, uh, and looked for products and things and services and ideas that were not correlated necessarily to the US economy or stock market. And I was never into, excuse me, I was never into gathering assets and doing life insurance and shit, annuities and all that crap. I built positions in companies. And that was when it came to the public market, but also raised a lot of money and invested a lot of my own money in venture capital, late stage tech, venture capital. Um, and so, and a lot of the biggest winners I've had in public markets have been in tech. Um, so anyway, the that's a bit of my background. But then in 2011, I left the active money management business, launched my newsletter, the Gold Investment Letter. It's goldinvestmentletter.com, where we focus on, um, you know, not only the gold and silver markets themselves, but we finance and invest in mining stocks that we like. And that sector has been in a mostly bear market for 3.5 years. Some of the bigger companies have started to move with the breakout of gold, but we go for also in the premium service here, and in the premium service and elite service there. We do look for those smaller gems where we can make 20, 50, 100 times our money. I've been lucky enough in my career that I've had a number of those in the junior mining sector. Um, since that 2012 period, I actually had very few subscribers. Picked a company called Zenyatta Ventures that had just discovered a very interesting graphite deposit. We didn't know how big it was, but as they drilled it out, and it was more robust and bigger than and continue to grow, bigger than the initial possibilities were. Um, and nobody was covering that stock, so I decided to make it my top pick at 18 cents Canadian at the time. Would probably have been about 15, 16 cents US. Tiny company, under a $10 million market cap. Within 11 months, it went to $5. And I got on the map with some people that found me through that deal in Canada mostly, but other investors around the world and in the United States that followed that very small sector. And we've carved out a wonderful niche there. And that's my baby, where I've been playing for a while. But when Bitcoin came around, and when I finally bought my first Bitcoin in 2016 at around $450 a Bitcoin on Coinbase, I recommended it not long thereafter to all of my free readers at Gold Investment Letter. It was under 500 bucks. But, as this stuff goes for all of us, I'm pretty sure, in the beginning, you just dip your toe in. It was like funny money. And so I call it funny money that I had when we went into the 2017, end of that year, bubbled at 20,000. I got out way too early, but I still made five times my money. And then I made some money trading it when it was between, 10 and 20,000. But what that did is it brought me, got my attention, because it reminded me very much. And I'm not going to make this a very long story. Don't worry. We're going to get to today. But it's appropriate because what it reminded me of is when I got in the business when I was 20 years old. A couple of years after that, that was in 95, late 95. Woo. After a 2 year undergrad stint, I dropped out. And a couple of years later, I would see these internet companies, Netscape, AOL, Yahoo. I was in a small firm that I ended up getting recruited from college when I was in a meeting for mostly like the graduate students that my roommate ran, where we had a Wolf of Wall Street-esque boiler room from Chicago come and recruit. And they wooed me, and I ended up getting hired and leaving school. Obviously, I didn't know it was a scam boiler room. They made it very convincing. But what I did find out pretty fast was that we were chopping people up, and I didn't want to. I really did not intend to get rich based on other people's, uh, you know, suffering and really committing just moral crimes. It was difficult to figure out for a lot of people because you rationalize it when you're in that situation, because all they do is point to the one winner they had over the last 30, and that was brief. But anyway, uh, I learned a lot there, but it got me my Series 7 license. I only lasted about 3 months. I lasted long enough to learn how to sell, which is key because all I did was make 300-400 phone calls a day in a small, smoky office working for an ex Bear Stearns and an ex Lehman Brothers brokers that were big producers that went off and started their own franchise. And so anyway, I would go to them and I would be like, we just look at the screen. I didn't even have a screen in front of me back then. We had what was called a Quotron. But I'd go into my manager's office. I'd go into the other guy's office. They had one in there. They had one in my manager's office, and I'd pop it in and I'd look and look at his screen. And we'd see these moves like on Yahoo. I remember stuck out quite a bit in Netscape. I'm like, what is this? What are these things? What is going on? And their response was basically, it's a bubble. And that was like really early on. You're talking 1997, 98. And so nobody understood it, but they'd continue to go up. And that wasn't even close to where they went going into the year early 2000. Anyway, I ended up leaving that firm in 98 or 99. I went upstairs to a regional firm, brought some clients over, got new clients. And I was enamored with a company called AlpNet that was a translation localization provider on the internet. So their services were growing as globalization was growing. There was also an internet play, um, kind of a unique one. They actually had revenues and earnings, and were about break even on and off. It was a $1.50 to $2.25 stock for kind of a painful amount of time. But what I decided at that time was I'm going to put my head down and I want to get somebody somewhere, new client, same client, to buy some shares of AlpNet every single day and just keep buying it while it's under 2.25, because I think it could go to $5 to $8. As this internet thing catches on and as they grow and it gets discovered. In the interim, we started to see signs like in 98, 99 about other pieces of the internet. Like I remember Ethernet was there was a company called LAN Optics that the owner of that firm, who was a very, very smart big broker who would build huge positions in individual stocks. That's where I come from, that world. I was not, that initially was my world, so I would buy equities and I would build positions. And the first one that got me to where I didn't have to make minimum wage and basically go homeless when I was 21, 22 was a company called Motocad that we were buying after it came public at $4 to $6. And I was buying the warrants between $1 and $2 for leverage, and learned about warrants, learned about those type of things. Stock goes to 10. There's a deal with Intel in place. They had a CAD software that was in the fashion industry. So we were learning about that, even at that time, realizing the internet's a thing, but we didn't even use it. I think that the first time somebody asked me for my email address was in late 99 or early 2000. It was probably in the summer of 99 or the summer of 2000, because we were outside in Chicago eating a pizza with a friend's girlfriend that played volleyball with us. And she said, give me your email. And I'm like, what? Like, what a dork email. And so I'm telling you this because what ended up happening was I ended up in 1999. I remember leaving, I believe it was 99 in October. I took my top 10 account values and I wrote them Morrison, Horwath, whatever, and I put them as the amount they were worth at the time that I went for the first time to Hawaii with my best friend and took a little vacation, and I taped it up on my wall. By this time, I was using, Yahoo. I was checking out the chat rooms, things of that nature, and buying a company called Land Optics that was an Ethernet play for connectivity. But it was all new to everybody, all new to us. Mobile phones and the internet and the information age. This shit hasn't been around that long, guys. We didn't have any of this stuff, 25 years ago, which isn't that long ago, and most of it in terms of its speed and efficiency and mobile, it's really been, less than 15 years, maybe a decade, that this stuff has been streamlined as a part of all of our lives. So I'm very grateful that I went through that because I put them on there because I was like, these are the lows. These are the account lows. The market had corrected, and everybody was talking about, the 2000 problem. If you remember, there was going to be this big travesty that was going to run through the world and the banks, because when the number flipped in the systems to 2000, the computer systems weren't up to snuff to transition where they could actually read that, and then the whole system was going to crash. That was the prevalent attitude at the time. I remember hearing this is a good story. So some of you will listen, some of you get off before I give you the juice about crypto today. It's worth your time. I know what I'm doing. I am not perfect, but I can help you guys. And some of us will make a shitload of money in this cycle. And I made generational wealth in the last one. And I'm going to share with you how to do that. But I'm giving you an example of why I figured out, the Bitcoin early, what to buy early, which coins, when to buy them, during what type of environments, and then when to take profits in what type of environments. And we just so happen to have a very interesting situation with crypto with these 4-year cycles, right? The crypto winters, then you could call it the springs, the summer, the fall. But in any event, what was I saying there? Yeah, so there was a economist, and usually when you hear an economist talk, basically to run the other way. They don't usually know what the fuck they're talking about. But Ed Yardeni, I liked him. I think he was at Deutsche Bank at the time, and he was on CNBC, and everybody's talking about this upcoming market meltdown. Like after January 1st, everything was screwed, and things were going to fall apart all over the world. It would be chaos. And he said, it's not going to be a meltdown, it's going to be a melt up, because this is not going to be as big of a problem as is baked in with the fear in the market, as everybody is saying. And I did, sorry, I've got a runny nose today. I ended up basically agreeing with him. I did more research and I thought about it. And I was like, he's right. And it's going to be a binary situation, meaning either everybody's going to be, the majority is going to be wrong, and then they're going to try to play catch up, meaning the market's going to go nuts. On the upside, and there's a lot of upside, especially with some of these like special situation internet plays, or everybody thinks it's going to melt down anyway, but let's take a chance. So it was hard to convert my people to buy in, but I had a core couple dozen very trustworthy clients at that point, and maybe up to 100 total clients. But I was still a very young broker. I was 24 years old, I remember at the time. I wrote those minimums down, and I remember that was October of 99. By January or February of 2000, in the peak of the internet bubble, all of those accounts were up between 10 and 17 fold. Okay. Big move, very fast. Land Optics, for example, buying it, shipping away. I probably started that summer in 99 and was buying it between $4 and $6. And I remember calling in, I was out of town, calling into my assistant. And I'm like, we didn't have this remotely. I'm like, where's Land Optics? $44. I'm like, why don't you trim 15% of the position, sell them, call the guys, that have it, and take some profits, and AlpNet was on CNBC the day that it hit, traded, it would trade by appointment between $1.50 and $2 for, a year and a half, where I was half of the volume most of those days. Okay. And you're talking about buying like 15, 20 grand worth. You're half of the volume of a NASDAQ microcap stock. Not really very excited. It traded over 10 million shares and hit $10.50 a share the day that the CEO was on CNBC. And so we made a lot of money there. I made mistakes though, because I was too young to understand cycles and bull and bear markets. So a lot of those profits I wrote all the way back down for myself and for my clients. And by the time I was 27, I was wiped. But I went through a bubble going into the internet and then watching for years. What my theory is that the internet bubble was so huge. It was crazy. You had things like that were being launched, like askjeeves.com, like a search engine that's some stupid copycat, like a meme coin copycat of Doge because it was successful, just like Yahoo was a big one then for search, AOL. And you ask Jeeves, and I remember it was trading at like $170 after it went public, billions and billions of dollars. That market got insane. My theory was that the market is a forward-looking mechanism. And what it saw ahead of itself was how much this internet thing was going to change our lives. But it got ahead of itself, like some of these markets, most markets do. But it was such a big bubble and mania that I thought about it and I'm like, okay, now looking back when I'm watching crypto rise up, it gave me reminders of that. And in any event, look at the people that got really wealthy with their investments in Amazon, Google, different companies that are the core now, top seven infrastructure plays and all kinds of things in social, search, whatever you want to call it. They're very diversified now, but seven companies were half of the returns in the S&P 500 last year. Okay, seven companies. That's why everybody's piling into Nvidia. I would never buy that stock here. I have no edge buying that stock. I would rather buy an AI mini token that has growth in their network, tons of followers, is trading for a $3 million market cap. Nobody knows about it. And it will have its day in the sun. How high it goes, we'll see. It'll depend on this next up cycle and the bull cycle. I pick themes within the themes because what we would do back then, I would look and say, okay, well, I want to buy the picks and the guys that are selling the picks and shovels, not looking for the oil or looking for the gold, because those guys have a one in whatever chance. But if I'm always making money just servicing them, I like that theory, and I would buy some of the services companies. And then e-commerce was just really coming into its own. And I would try to get ahead of Wall Street in terms of what was going to be the next little mini piece, which, could have been search, whatever. But the people that made all the big money was after that crash. If you put some money in when Amazon had its back up against the wall, was still losing money. Not a lot of people had that foresight, but whoever did, look how much Bezos is worth today. It's incredible. But we had to have in the background, the thing that I was watching and that we need to be watching with crypto is the adoption, the network adoption. We can count it the same way in crypto as we did with internet usage around the world. This is a global phenomenon. It is a new system of value that is coming up out of the ashes, thank God, while the other system, the old system, the fiat currency, debt-laden, debt-based system is top-heavy and coming down and crumbling. We're seeing it faster in some markets and slower in, things like the dollar that have become this scam hegemony, reserve currency. I've benefited from it. I'm an American, so I'm not complaining. But we're fucked. If you think that we can get out of our debt, we were watching these joke presidential debates the other day with two geriatrics, and basically, it's like they talk about all these things on the surface and little data, and I did this and I did that. But you can't look at an inflation number from the CPI and get the truth. You could just go to your grocery store from 3 years ago. Prices have doubled. You have to build in. Raul Paul from Real Vision talks about this, and from GMI, he talks about the fact that you basically have to build in an 8 to 12% hurdle rate. And that's minimum of what you need to make on your investments and wage increases every single year to keep up just with the debasement of the currency. How much money is being printed to keep it afloat. including the United States. So they don't include shit like, I mean, I can't believe it. I knew this was Fugazi years ago when I learned, just like with the CPI, which people look at for the consumer price index for inflation numbers, they don't include energy or food costs. The two most important things for people every single day. They don't include them in that. And we went up to 10%. Now it's been coming down, but even those numbers are not right. They're not real. They're bullshit. But when you take, there is a difference between inflation, price increases, and then also the debasement of the currency is, you know, $1 today. If you look at a 10% inflation, it buys 90 cents that next year in value and goods. If you have another 10% of debasement and your currency goes down, you can say the dollar's been strong relative to what? Other fiat currencies. You need to start pricing these things against gold and Bitcoin, the two true metrics of value, period. Gold is still the king store of value. I'm not in Bitcoin to store my value of what I've earned, and meaning in 20 years, it's going to buy the same amount of goods and services as today. That's what it does. It goes up about 10% a year against the US dollar. It goes up more if your own currency is falling apart harder. It's like an inverse mirror, and it still is the case today. Bitcoin could become the preferred vehicle, digital gold or whatever, but I'm not in Bitcoin to make 10% a year. It's a venture capital stage investment that I still think is going to go up tenfold from here, at least fivefold in this particular cycle or close to it. Or else why deal with the volatility, man, and the risk? There's a lot of it still there. We're early in this, but the point is that when we would follow how many people around the world were using search and setting up email addresses, that's how you could tell that internet adoption around the world was going from, tens of millions to billions. And that's important. And so it's a network effect. How many people had crypto wallets? I remember less than 3 years ago in 21, it was like 125 million or something, 125 to 150 million. Now it's approaching 600 million. It's like 550. So that's tripled even during a brutal bear market when the adoption did slow with crypto wallet, new crypto wallet starts, but it was still growing at an incredible pace in 2022. Right now, crypto wallet and crypto adoption in the back end is over 150% annualized. If you look at where it was a few years ago, we were at like 117%, I believe, which was like 2021 when the market hit an interim peak. And that's twice as fast at that level as the internet adoption was in 1997. We're still very, very early, ladies and gentlemen. That's the point. The one thing that I regretted when I looked back at I made a bunch of money for the first time in my life, well deserved, because I made my clients a lot of money and I took a piece of that. I fucked it up on the back end because I didn't understand bubbles. I didn't understand cyclicality. I didn't understand bull and bear market cycles like I do today. But, this is why you get these big booms in crypto, because it's seeing ahead that this is the new system of value. There are so many subsets to it. There's AI correlation. There are many things that are going to most things will become digitized in the next 20 years, and we're seeing those fits. And then we also are still, I do believe there's a correlation with these 4-year cycles around the halving event, because you're taking supply out of the market. This is a complete opposite of what we're used to which is just inflationary, more and more and more and more and more of what is money. Bitcoin is a store of value, but it's more than that. It's a way to get ahead if you're right and you stick with this and you do it in a way that is not foolish and emotional. Like a trader, you're not going to outtrade crypto. Even if you're a professional trader, trying to outtrade crypto is very dangerous, and most of you will get your head kicked into the curb. Okay. I swing trade, I put trade alerts out in premium. But they're not like, they're very much like the cream on top of the long-term portfolios that we don't touch. And we try to get in the area of these pullbacks, the bear cycles, the pullback dead periods like right now, in areas that have been oversold, that are kind of washed out, but we still think we're in a bull cycle for crypto that is probably midpoint or so. And then this, the last third of a crypto summer into the fall is when all the fireworks start to kick in very fast. So anyway, the regret I had was that if I would have just taken more time, instead of thinking like a broker and a trader at 24, 25 years old, it was 25 at the time, 25, 26 going into 2000. And if I would have just taken more time to learn how to use the tools of the internet from a monetary standpoint, a business standpoint, I always say, like, imagine if you were a wholesale vacuum cleaner sales person and or manufacturer, and you learned about Google AdWords first. You'd be the biggest vacuum distributor on planet Earth, because you figured out how to pay for customers and get an ROI on that and just keep investing it. And you always had an edge. You always came up first on the algorithm, and this hugely growing thing around the world. I didn't do that. I didn't think of it that way. I thought of it as this story that was building that wasn't really appropriate for me. I didn't learn about e-commerce because I wasn't using it enough. With crypto, I've spent the last years. I learned about DeFi by using DeFi. I learned about NFTs by buying NFTs in 19 and 20, going into 21. And those two sectors were the leaders within the crypto market sphere, which I had identified ahead of time of the big money, which is when I was socking those away. And so that's what I've done differently. I use a lot of this stuff. Some things I don't go deep enough because they're not a core position enough. And there are things technologically, and from a programming standpoint, I don't fully understand. But I look at things in certain compartments that are very valuable from my background as a venture capital investor and an equity investor, which is when you're looking at tokens, the tokenomics, the structure, the growth. Is there product being used? Are there a lot of followers on Twitter? They're super active, and they were well funded from venture capitalists as well, but their token is trading for a $4 million market cap, and they have 200,000 followers on Twitter, and their network is growing, and they're increasing it and improving it. These are the things I look for. And then watching those tokenomics are a big deal too, because you have to. If there's too many outstanding, or there's too many coming into the market for supply, your returns are going to be mitigated. So what I wanted to share with you today, I wasn't planning on talking about that story, but it gives me the qualification. I think it gave me the qualification for myself in 2020. I launched a special report because at this point I was frustrated with my own people, some of which paid me, 10 grand a year for ideas, my elite members. And I maybe got 30 or 40% of them to buy Bitcoin. The rest of them wouldn't listen. And then they're calling my phone off the hook. They wouldn't buy it at 5 or 10 or 15,000, but they were freaking out at 45,000, wanting to get rich too. And I just ignored them. Like, you've missed it. I called you, begging you to do this, do something. You didn't do shit. You're gonna have to wait in line on that one. We'll go back to our bread and butter, and I'll make you some money there. But in any event, I launched this special report, and it was in time. It was like November of 2020, where I'm like, I've done so much homework. I've got so many good ideas. We're about to get the peak of the bull cycle, and whoever buys these reports, I had like a $3,000 minimum one. That was like just the blue chip holdings in my portfolio. $6,000 tier 2, which was including some of the mid caps, and then tier 3 was 10 grand, and it was like, a bunch of speculative small caps, some of which went up 500 times, 300 times. And it was a report. It wasn't supposed to be a newsletter, but people bought it. And then I did a Q&A one day, and I realized everybody was like, okay, so I got your report, like, how do I buy anything? Like, what do I do? I'm like, damn, like, I have to help these people get onboarded. It's a process for all of us. So the long story short is that that special report group turned into a newsletter to keep them up to date for 2 years for free, basically. And then I decided in late 22, during the peak of the bear cycle, I'm like, I'm going to start Phenom Crypto. And that's where we are today. And so, excuse me, it's very difficult for us to look at all the information from all the different people and all the gurus and all that stuff. I'm definitely not a guru, but I'm very real. I don't have any paid deals with any fucking tokens or promoters or anything. We had on our newsletter, I mentioned this to premium members earlier today, where we went through some of our portfolio on the speculative plays. And I said, my analyst who's also running the back end and the weekly stuff, we had these ads that were put in there, which he had good intentions of to monetize, things. And we were up to like $1,500 a month, I guess, from people that clicked on these different ads that we were sending out to you guys. And I'm like, get this shit off of here. Like, I don't want to focus on something to make a few grand. I don't know who these companies are. We don't know who they are. We don't need that. We're going to be supported by premium paying members. That's who I'm devoted to. But you get a taste here in the free letter. If you want more and you want to do it at the right time, there is going to come a time, guys, I promise you, where I'm going to say, I'm taking profits, or I'm certainly not buying anything right now because the market is too expensive. Right now is an ideal time, right now in this lull, to go shopping and to get positioned and to take this shit seriously. Even my elite members, I believe 70% of them at least are under allocated to crypto in their portfolios, especially the people that have come over from my other, more traditional investment letter. I don't know how that looks with the makeup here that we have, but we have a great group here. And I know this video is a little long, but I just wanted to, give you an update on my thoughts, which is that right now is a buying opportunity in crypto, big time. And it's going to go away probably much sooner than later. I don't know if the market starts to take off and Bitcoin goes to new highs in 2 weeks or in 2 months, but it's probably not going to be later than like September that we kick back into gear. And we might have one flush out before that happens to scare the shit out of everybody that's new. But the sideways action that we're seeing between mostly 60 and low 70s, this is very healthy. It means it's building a base for much higher levels. If we just kept pushing it, after the ETF approvals, we would have had a lower top in this cycle than we will if this continues to consolidate. It also gives us more time to accumulate shit coins and, other good opportunities. I like a mixture of half to 2/3 of my portfolio is in Bitcoin and Ethereum, 2/3 Bitcoin, 1/3 Ethereum. And, call it a quarter in mid caps, top 50 tokens. And then a quarter to, for me, it's more, it's like 50%, highly speculative stuff because, I had 8 tokens in 2021 that I took partial position profits on, making between 125 and 650 times my money. The biggest was Bakery Swap, 0.012 cents. The high I sold some was 777. I didn't sell it all there, but it doesn't matter. You don't need to sell much at a 650x return. And then when you have dozens of others that were, 20 to 100x and, that type of thing, it adds up, man. Trust me. And I gave a lot back. I made mistakes. I left money on Celsius, BlockFi, had money with a hedge fund that for some reason kept 85% of the LP's money in FTX. I didn't have an FTX account, but I got hit hard with certain shit and it doesn't matter. I'm set for life. We're going to have another one of these situations coming up where you can make a lot of money, but you got to be on top of it. You have to take it seriously and you have to get ahead of it, or you are a sheep. And you're the reason why people like me go from nothing to something, because we have been able to control our emotions. We've been through these things enough times. Don't get it perfectly, but right now is the area. Just don't worry about the particulars. People that I tell them about an altcoin that barely trades, it's at a $5 million market cap, and they go like 0.001 cents cheaper than the bid. I'm like, what the fuck are you doing? Buy the offer, go high bid, for the first half of what you want to own. You got to get it on the books. And then you sit back and try to accumulate something. You're going to try to save 1% on a deal that could go up, 5,000%. These are little things, but I talk about this a lot more in premium. And so those of you that are, interested, you could just go to the site, phenomcrypto.com, hit the premium button. We're going over a whole new stack of a lot of the mid caps that I own. I'm showing my Coinbase account. Probably tomorrow it will be, or Monday at the latest. So you can get that. I can resend you the one I just put out that showed my MEXC account with a lot of the speculative small ones that we really like and have been buying, some of which are down a lot right now. The AI tokens, which is my favorite space subsector within crypto for this run, are down the most. So, I give some of those here and I will continue to, guys, but paying whatever it is, 1,200, 1,400 bucks a year for the Phenom crypto, or you could do 6 months at a time. Like, even if you have a few grand to play with, my job is to make that very worthwhile for you. And it doesn't guarantee success, but I'm not saying I can change your life. I changed mine, and I'm going to try to bring as many people with me on this next cycle and get in the ballpark. And I think I can help because I spend a lot of time in this stuff, and I try to make it easier for you guys because it's very difficult to stay ahead of what is happening out there. The speed in which things are changing, it's phenomenal. It's fascinating. It's a bit scary, but you got to get your shit together one way or another. And if you're a working person, even making 200 grand a year, you think you're going to get ahead if you live in a big city on that? I remember this is 20 some years ago, making 150, 175 grand a year in Chicago. And I have like 5 or 10 grand in stocks at the end of the year. And those usually blew up or whatever, went up and down. And I couldn't get ahead on that. I'd spend it all, living la vida loca a little bit. But today, crazy. So anyway, reminder, today in these days, the summer lows, when things are quiet, when things are down, it's our time to be positioning and to be deploying capital, fresh cash into crypto. Go up the chain, just Bitcoin, go down the chain to the shit coins, go a mixture, which is my preference, but just be putting money to work. Do not be concerned about things that are down, and don't put too much in any one thing so that you're going to have your emotions upside down if you get a big dip or you get a big move up. The volatility can be your friend or it can be your worst enemy. Cheers, guys.